Ted Wechsler, one of Warren Buffett's two lieutenants at Berkshire Hathaway, recently made a deep value investment. Wechsler recently disclosed he had personally bought over 1 million shares of Dillard's. We don't know exactly when the purchases were made, but the purchases crossed a 5% mark on September 29th, which necessitated the filing. Business at Dillard's is slow, and the coronavirus has caused a big drop in sales. The company was also removed from the S&P MidCap 400 index when its market cap dropped below $1 billion after the stock fell 43% this year. So, why is Wechsler buying? Well, let's take a look. Unlike many other major retailers, rather than leasing, Dillard's owns the real estate at most of its locations. It also has its own in-house general contractor. This strategy is more capital intensive, but it also allows a company to save on rent expenses over time. Additionally, with the real estate tending to appreciate over time, the company has assets it can sell if times get tough, and times are tough. At the end of fiscal 2019, Dillard's owned 244 out of its 285 locations outright, and it owns all of the distribution centers as well as its corporate headquarters. On the balance sheet, that accounts for about $1.39 billion in property and equipment, net of depreciation. The property and current liquid assets make up most of its $1.37 billion in book value and makes the $365.8 million of debt very manageable. Moreover, the real estate is recorded at cost, so those assets are likely much more valuable. By some estimates, those assets may be so valuable that Dillard's could actually be selling for about 30% of its liquidation value. That's a big margin of safety. Dillard's has performed better than feared. Though revenue was down from the prior year, it was better than expected. In fact, because of cost controls, the company had only an $8.5 million net loss last quarter, which is impressive. Moreover, the company continued repurchasing shares during the second quarter and has continued to pay its 15-cent quarterly dividend. So let's take a look at our charts. And now we're looking at the 20-year monthly chart on Dillard's, and the symbol is DDS. For disclosure purposes, I don't hold any shares of Dillard at this time. And looking at the price chart, we definitely had that high back here in 2015. We came down here, multi-year basing, with then the move on up into 2018 at that point. But subsequently, we've had a drop down here under 25, but we're back up to $53.45 as of the close on Monday. And given some of the cautionary flags that I see in the current market, my suggestion is just simply watch the price chart and oscillators on Dillard's. Let that give you some experience for the next time that we do see a dirt cheap opportunity. So moving on down, you see here. Now, what I like about the volume is even though we had a huge price drop off, the volume wasn't really significant, and that's a good sign. Here into the MACD, you see there in 2016, 2017, a nice bottom and basing period. Here it's much quicker, but it came down to about the same level, maybe just a little bit lower. And now the improvement's pretty quick, with the fast line moving up, wants to go through that slow line, and I think it will pretty quickly here. Moving into the histogram, see pretty much the same thing. Price rate of change, the basing and bottoming is evolving pretty well. Fast line moved through the slow line there, above the 50 and heading up to that zero line. RSI, relative strength, nice move here. Very hard, sharp bounce back up above that 50. So again, probably not worth chasing at this point in time. Moving into stochastics, we also have a nice bottoming. It looks like the fast line wants to move, and given some of the other oscillators, this probably will move up to that 50 or midline pretty quickly. Same thing there with the Williams. Down here, bottom and basing certainly, and that quick move up to that 50 or midline. Looks like it's going to continue here depending upon what happens in the market. But once again, I see some cautionary flags in the overall market if you've been watching the update, so you know. So once again, watch this, see how the price chart and the oscillators evolve, and as usual, conduct your fundamental analysis. And for today, that's ChewDog Charts. Thank you.